Good afternoon, everyone, and thank you for joining us today for Be Ready for 2024 Tax Preparation. I'm Rebecca Chauncey, a business advisor here at the Illinois Small Business Development Center, or SBDC, at Build Bronzeville. Pleased to have you join us today. This training is brought to you at no cost because it's funded in part through a cooperative agreement with the US SBA, or the United States Small Business Administration, the Illinois Department of Commerce and Economic Opportunity, and the Urban Juncture Foundation. Just one housekeeping note today. If you have questions, please type them in the Q&A section, which you will see if you hover over the bottom of your screen. Type those questions if relevant in the moment. I will share them with our presenter, and there will also be time for you to share or ask questions at the end of the presentation. And I am so pleased to pass the mic over, if you will, to our presenter, Gina Jones, who is an accountant and CPA and owner of Jones Tax Group. Gina Jones, please tell us all about things we need to prepare for 2024 taxes.
Thank you so much, Rebecca, for the introduction and for having me. Um, I am just wanting to make sure everybody is ready for 2024 tax time. And so I hope you're ready to talk about tax because we're going to kind of get some good stuff in here today. And just by introduction, my name is Gina Jones again. I am an entrepreneur and I love being an entrepreneur and I love helping entrepreneurs like you guys. I've been married for 25 years. I have 6 kids. I love food. I am a chef. I am an attorney and a CPA. The most important thing you need to note there is I am a person who loves food and I have a lot of kids. So I talk fast and I try to get a lot of stuff done in a little bit of time. So if I'm talking too fast, this is why, just to give you a little background. So let's jump in. Today, I want to give you an agenda. First thing we're going to talk about is BOI. Like, are we doing that? We're not. We're going back and forth. A lot of people are very concerned about that. So I'm going to put your concerns to rest. Number two, I'm going to talk to you about what you need to take to your preparer, what you don't need to take to your preparer, and the things that you need to keep on file yourself. And those are the documents that you should keep in order to prove your deductions. Fourth, we're going to talk about accurately reporting income and expenses. The tax return is not a race to zero. It is a place where we accurately report the operations of our business. And then finally, I'm going to give you 5 super awesome tax strategies that you can use right now in 2024 to reduce your tax bill. And then finally, we'll have questions. But like Rebecca said, if you have questions as I go, feel free to pop them in the chat. So let's talk about this BOI mess. And this is the beneficial ownership interest reporting that we heard about, we knew about, and really the thing we remembered about it is that if we didn't do it, the penalty is $500 a day. Look, that's all you got to tell me. Like, tell me more. What do I need to do? I don't want any of that. So what happened was, initially, we were supposed to file this report. It had to be filed for any businesses that started prior to 2024 by December 31st, 2024. But then on December 3rd, the Texas Federal District Court said, no, you don't really have to do it. And then on December 23rd, the Fifth Circuit of Appeal said, yes, you do have to do it. And they extended the due date to January 13th. But then on December 26th, the Fifth Circuit vacated that stay and they said, no, you know what? After thinking about it, you really don't have to do it. So that's where we are right now. We do not have a BOI reporting requirement, meaning there will be no penalties if we don't file the BOI report or the beneficial ownership interest report. But if you just really want to, you absolutely can. Just to kind of say, look, I did it, I'm done. I don't have to think about it anymore. So that is totally optional. But again, you do not have that requirement to file that report. Next up, let's talk about what you need to take to your preparer. So a lot of times people come into my office and they have, I don't even know what. It's just like stuff and papers and then it's like food wrapper. It's a mess. It's a mess. So let me tell you exactly what you need to take to your preparer so you can save them the hassle and they will love you a lot more and return your calls if you bring them this information and not the wildness. So the first thing you need to bring them as a business owner is a profit and loss statement. A profit and loss statement accurately sets out the income and expenses of your business. And it tells you things like gross profit, net income, how much you spent on cost of goods sold, how much you spent on marketing, all of these things that go into the tax return as deductions. And so they're able to easily do their job because you have had the proper accounting done, or maybe you did a spreadsheet yourself or something where they can easily ascertain what your numbers are. Now, the next thing you need to bring, possibly, if you need it, is a balance sheet. Now, you really only need a balance sheet if you have a business that has made that has grossed over $250,000. In that case, you will need a balance sheet unless it's a single member LLC. Now, a balance sheet is a financial statement that shows your assets, your liabilities, and your owner's equity. So this is something that an accountant definitely needs to prepare for you. Do not try to create a balance sheet on your own unless you have training in accounting. It's going to be wrong, and the IRS is going to call you and be like, what the heck is this? So if you've made over 250K and you're not a single member LLC, get an accountant involved and get an accurate balance sheet. Next, you need to make sure you bring all your tax forms for your business, like if you've received 1099s or if you've received forms K1, all those need to be brought into your preparer so that he or she can accurately prepare your return. And it's not a situation whereas they prepare the return and you're like, oh man, I forgot to bring that form. It just creates a situation where now they have to amend. So just make sure you have everything before you go to your tax preparer. And then finally, know what type of entity you have. So a lot of times people will come in to my office and they'll tell me that they have a corporation, but really they have a single member LLC. And so, I'm at a point now where I don't believe anything anybody says when they come into my office. Like, I trust but verify. Plus, I already know that they might not be well versed really in what type of entity they have, because having a certain type of entity is one thing, but the type of tax treatment that that you may have requested may be something totally different. So, for example, you could have an LLC, but you requested to be treated like an S corp. So that's just one example. So really know what type of entity you have. That will really make it easier on your preparer. And I already said, do not bring in a bag of receipts where the print or the type is rubbed off. Like we can't hardly see that stuff. I do not feel like having to put my glasses on to try to figure out what you're trying to tell me. So that's why you're not bringing that bag of receipts. You're going to have the profit and loss, the balance sheet if needed, all your tax forms, and knowing the basis of your business and the type of entity that you have. Next up, let's talk about the records you should have on file, but you don't necessarily need to bring these to your tax preparation appointment. This is where you start having that box and that bag, whereas what I suggest you do is organize all these things into file folders or envelopes or something, whereas you have all of your 2024 bank statements in one file folder, you have all your credit card statements or summaries in another folder. Then you may have like your business meal receipts in another folder, or however you want to do it, but it's organized and it's not just a bunch of crap like just thrown together. Now, in case of emergency, whereas you're moving, you're shaking, you're taking care of business, having a bag, a box, or even the console of your car, and that's kind of just where you're throwing everything all year long, that's better than not having anything. So if you have to do that, okay, just try not to, because you really shouldn't be in that much of a urgent situation where you don't have the time to organize your files and really know what's going on in your business. So bank statements you should keep on file. Credit card statements you should keep on file, as well as year-end summaries. You should keep receipts. Some credit cards actually keep the details of a receipt, so you don't have to keep the physical receipt. Some do not. So just to be safe, keep your receipts, keep them categorized, like for example, meals, or you have a file folder for gas receipts, you have a file folder for office supplies, whatever it is that, however you want to organize it. But just please make an effort to organize that information. It will do you a lot more good, and your tax preparer will appreciate that. Also, proof of charitable contributions. Now, I'm going to stop and talk about this for a minute because I've seen a lot of people write off a lot of things as charitable contributions, and I'm just going to tell the truth about this. So, charitable contributions are contributions that you give to 501c3 organizations. That's not when you gave your aunt that grocery money and gas money last month. That's not what it is. It's not anything that has to do with childcare, even if your childcare center is a not-for-profit organization. It's not when you give your time, like let's say you volunteered at an organization, your time is not deductible. So that does not count as charitable contributions. And let's just say your church had a gala or your organization had a gala, the tickets were $200. You got dinner, you got, whatever you got. So the value of that charitable contribution is that $200 less whatever you received. So any goods and services exchanged for a contribution is reducing that contribution. And then also, I just really want to encourage people to actually have a charitable contribution and do not give cash. Cash is very hard to track unless you, like, let's just say you give cash to your church every week in an envelope with your name on it. That's a different situation. But if you're just throwing cash in the offering box and nobody knows it came from you, that's not going to be deductible because you won't get a letter from the church or the organization saying, hey, yes, this person, they gave X number of dollars in 2024. And that's really what you're going to have to prove up in your records so that your deduction is supported. So let's just not do janky things and call them charitable contributions because it sounds good. Giving your money, you giving your cousin gas money also is not a charitable contribution. Even though your heart is in the right place and you're a very good person, it is not deductible on your tax return. But God sees you. So I'm just saying there's value there. Next, let's talk about mileage laws. So this is something a lot of people miss as far as a deduction, and that is their vehicle use. So I'm sure that in your business, at some point, you drive somewhere to do something. Your vehicle has larger potential deductions through depreciation and things like that, but you can also deduct mileage. I think the rate for 2024, I want to say is about 63 cents. Don't quote me on that, but it's somewhere in there. So 63 cents per mile can be substantial depending on how much you drive over the course of a whole year. Like that's a long time. And so to miss out on, a $5,000 deduction, $2,000 deduction, any dollar deduction, is not beneficial and it just doesn't make sense. And it's not that you have to sit there with a spreadsheet and say, okay, I did this, this was 2 miles. No, you usually have, generally speaking, in business, places you go regularly, you know how far your clients are from you. And even if you don't, all you got to do is get on maps and, save the destination and it'll tell you how many miles it is. How many times did you go there? Every week? Okay, that amount times 52. That's the mileage just for that client. How many times did you go to Staples? How many times did you go down to the SBDC office? How many times did you do anything that you needed to do that was business related? That business meal that you went to downtown and you live in the south suburbs to meet with that potential client or to meet with that potential funder. All of those things, count as far as mileage for your automobile. Another thing you need to have in your records, this is not something you need to take to the preparer because these records have gone already into the financial statements, the income statements that you already taken to the preparer. These are just for you to keep at home. The business meal details. So Business meals and travel are a highly audited item, and that's because people abuse it. So when you have business meals, you need to keep some details. If you have the receipt, just write it, who you met with, what the business purpose was, what you discussed, and what it is you plan to get out of this meeting. Now, you could either write it on the receipt, keep the receipt, or alternatively, you can keep it in your calendar. So I always tell people keep a calendar, and I don't know who's in business that doesn't keep a calendar, but you can easily go back to your calendar to say, oh yeah, I met with this person. We met at this restaurant. This is what we discussed. This is blah, blah, blah. So it's not anything additional that you have to do. It's kind of still in the four corners of that calendar and what you're doing daily or what you're reviewing daily. So write it somewhere, keep it somewhere, all in one place. And I promise you, if you have to prove this up, going back to your calendar, even mileage, you can keep mileage in your calendar. On this day I met with this person, downtown or whatever. And even if you don't write the mileage down, you can get the mileage later. It's just a matter of looking at your calendar to say, okay, yeah, I had 3 meetings that day in these places and blah, blah, blah. So your calendar can be a very, very useful tool for proving up your deductions. So business meals is a big one, as well as travel. I like business travel, and there's so many opportunities to deduct business travel or personal travel that has a business element in it or a certain amount of business conducted on the trip. But again, documentation. What was the agenda? How many days did you meet? Who did you meet with? What did you discuss? All of these things. So just keep all of that in mind and really turn your calendar into that tool that answers most of the questions that may come up later. Next, let's talk about accurately reporting income and expenses. So let me just say you should pay the tax that is required by law, but not a penny more, not a penny more. You should also consider engaging in legal tax planning to reduce your legally required tax obligation. Legal tax planning is not where you prepare an accurate return and you have a liability and you start changing numbers. That's not it. That's not it. This is a more proactive, strategic approach based on the IRS tax code. So that is legal tax planning. And I really, really encourage everybody, especially business owners, to really, really get into this tax planning, which is one of our major services to reduce your tax obligation. I mean, we reduce tax bills a minimum of $10,000. I mean, that's just like child's play at our office. Finally, don't make up stuff. Just because you don't like what's happening on the tax return, don't start making up stuff. New line items, it just doesn't make sense. Just do tax planning, okay? That way we can have a result that we like and we don't have to start making stuff up on the return. Now, here's another reason that we want to make sure we have accurately reported income and expenses. We don't want to underreport our income. For example, if we don't have proper financial statements that we put together on, for example, an accurate income statement, we may still have funds that from sales and PayPal, but they haven't been put into our bank account. And so now it's not seen on the income statement. Or maybe you have money from clients or customers that were deposited into your personal account, which you kind of forgot about, and now it's not in the income statement. The problem with underreporting income is that the IRS has a system where it matches up all of the money that you got from all of these places. If what you report on your tax return is less than that, they send you a letter saying, hey, I know you said you made such and such, but we have proof that you made such and such. And here is not only the difference in the liability, but here's all the penalties because you didn't report it right. That could also lead to audit. And then if it's really bad, it could lead to tax evasion. And we don't want any of that because it's just really unnecessary. Also, we don't want to underreport expenses. Same thing. Maybe you paid an expense with your personal credit card or you use cash. Well, your business bank statements or your business credit card isn't going to talk about that. So we have to make sure that those things are considered so we don't miss any deductions on the tax return. Also, maybe you're trying to do your books yourself and you haven't recorded any depreciation. Well, guess what? If you purchased a car in 2024 And especially if you purchase an electric vehicle, I mean, you may have a $7,500 tax credit and you may have an $80,000 tax deduction. But if you're not recording these things and you don't really know anything about those, guess what? You're gonna pay a whole lot more tax than you should have because this feels like refund. $7,500 tax credit and potential $80,000 deduction. Come on now, we gotta take advantage of that. And so again, the problem is that when you don't know or don't do these things or include these things, and really the problem is not keeping everything in the business. But as an entrepreneur, I know things happen. But just make sure you are saying, oh shoot, I did pay some personal, some business items through my personal. Let me make a list of those, or let me bring those into my QuickBooks, or whatever it is you need to do. We just want to make sure that we get all of those deductions in and we recognize all of the income that we earned. Next, we also don't want to over-report expenses. And that means that we're deducting things that are not deductible. For example, mortgage payments are not deductible. Mortgage interest is deductible. Those are two very different things. Paying a car note is not deductible. Paying the interest on the car note is deductible. So we don't want to deduct things that are not deductible, okay? Again, have a professional help you out. Get your financial statements prepared accurately. And the problem again is if your expenses are too high, that means you didn't pay enough tax, and we're right back at that audit/tax evasion stage, which is where nobody wants to be. So certainly get a professional involved if you feel like it's time. If you feel like you got it under control in your spreadsheets, and a lot of people do, awesome. Just make sure you don't forget those personal expenses and do not forget about depreciation. Now, you have to have an accurate balance sheet if your company made over 250,000, but you should have an accurate balance sheet anyway to always understand what your equity position is, like your assets versus your liabilities. So you always want to have accurate assets, liabilities, and equity accounts. You want to have accurate depreciation. You also want to make sure you're tracking the money that you may have loaned to your business or that your business may have loaned to you. Also, this all goes into having an accurate equity position because you never know when you have an opportunity to get a grant or a loan or partner with someone. And all of this in due diligence, people are going to want to see your financial statements, your profit and loss statement, as well as your balance sheet. If your balance sheet is a mess, nothing is going to happen. I mean, because it's like, wow, what does this even say? And even not to have one, speaks about the vigilance and financial attention that you're paying to your business. So in the long run, it really, really does pay dividends to make sure you have accurate financial statements. And the problem here is you can't present misinformation to third parties because that's like a misrepresentation of your financial position and it could be considered as fraud, especially if somebody relied on that to loan you money or give you money or partner with you. And then at the end of the day, it's revealed that that information was just kind of made up and not true. That could get you into a place that also we just don't want to be. Now, just a little bit about business taxes. So a lot of people, and this is, it goes to personal taxes too, but a lot of people don't understand that when you file your tax return, you're filing a return, an information statement, but the money that you owe should have already been paid. So the IRS expects that you're just like kind of reconciling with them. So you've already paid everything. When you have a balance, especially when it's a pretty big balance, um, you're going to incur a lot of penalties and interest on that. And then when you ask for an extension, like your preparer may file an extension for you, that extension is only to file the paperwork. It's not an extension to make any payments. Payments have to be made over the course of the year, or else it's automatic penalties and interest. So the penalty for not filing a return on time is 5% per month of the amount due. And then it's 0.05% per month for not paying what's due. So those are two totally separate penalties and both work together. As far as when you look at that paper, you're like, oh my God, how much Where did this penalty number come from? Well, this is the calculation here, not to mention the interest. And also, making estimated tax payments is not tax planning. Tax planning is a proactive method to reduce the entire liability. Making estimated tax payments is just paying on the liability. So we rather not have the liability than making payments on the liability. And I hope that makes sense. Now to the good part. One of my favorite parts, which, like I said, is tax planning, something that we specialize in. So 2025 is our last opportunity to take advantage of the 2021 sick and family medical leave credits. It's comparable to employee retention credits of corporations and S corps, but up to 32,220,000 of refundable credits is still available for you and for your business if first of all, if you didn't already claim the credits, okay? But also if you were self-employed in 2021. Now, I know some of us have to think back, 2021, oh man, what happened? But if you were self-employed in 2021 and you are either a single member LLC or you are a multi-member LLC taxed as a partnership, remember I talked about the type of entity you have versus the tax treatment that you get. This is an example of that. If you are one or the other, single member LLC as a sole proprietor or multi-member LLC as a partnership, then you will qualify. And you were unable to work for a period of time during 2021 due to COVID-related illness, a mandated quarantine, or you self-isolated due to COVID symptoms, or you were just feeling like, I don't know if I have COVID, I don't want to be around people, that would qualify you for this credit. Or if you were caring for someone who had COVID, or you were caring for a child due to a school or daycare closing. Now, I don't know about you guys, but my kids were at home in front of a screen every day in 2021. Nobody attended school. So this credit is kind of a low-hanging fruit because as far as I know, everybody was pretty much in the same boat. So this is almost like a very easy credit to apply for. And if you could use the extra 32,000, I'm just saying, let's just get it done because the window is closing on this, and it will close and no longer be available, after either April or October. So don't wait though. Don't wait on this. The next tax planning opportunity that's still available is putting your kids on payroll. I tell everybody put your kids on payroll because 9 times out of 10, the kids are doing something in your business already, and you're already giving them more money than you really should. So the perfect storm is they're really doing a job for you, and you're already giving them money. Let's turn that into a deduction that benefits your business. And the best part about that is that if they're under 18, you don't even have to pay FICA tax. You don't have to pay any withholding. They don't have to file a tax return. So you get the deduction. They don't have to report the income. Like, how could you not? Now, caveat, they need to actually be performing a function in your business. Okay. This is not something made up. This is not, anything illegal or playtime. They are doing a job in your business. For example, most of my children started working in my business by shredding documents, by cleaning up the office. Then they graduate to filing documents. That didn't always go well because I'm wondering, like, how did W get before F? But anyway, I digress. I'm just saying there are functions generally that the kids can perform in your business, and it depends on their age. And nobody can say the age that is appropriate for the type of work you have them do. We have, 10 and 11-year-olds that are whizzes at social media or design or whatever. So think about what your kids may be able to do in your business, put them on that payroll, get that deduction. Like, why wouldn't you? And I think in 2024, 14,600 is the max that they can receive without having to file a tax return. But even if they did have to file a tax return, so what? But just to avoid that, $14,600 is the number that they can receive without having to do so. Um, Also, if you have a S corp, get an accountable plan. An accountable plan is where your company gets to reimburse you for expenses, and you don't have to claim those expenses as income. So the best example I can give is if you have an S corp and you have a home office. Your home office is not going to be deductible unless because it's your home office and it's not the office of the company. Like it's not the company paying rent to a, building for leasing a space. It is the expenses that you incur in your home for doing business for that S corp. The accountable plan is the way to reimburse you for the expenditures that you are incurring on behalf of the business. And so the accountable plan can, be an awesome, awesome tool to reimburse a lot of different things, car expenses, you name it. That is a very valuable tool. So if you don't have an accountable plan, get one. Fourth, I want you to consider implementing a retirement plan in your business. Um, Retirement plans are awesome, first of all, because it's essentially where you get to put money away for retirement for you, and if you employ your children, for your children. And all of those things are deductible. And they even have credits available for setting up a retirement plan and paying into that retirement plan. And you get an additional credit if you set up like a recurring, like $20 a week is going into the retirement plan or $50 a month, whatever. You get an additional credit just for doing that. So setting up a retirement plan is a win-win-win situation. So I encourage everybody to do that. Finally, consider giving fringe benefits to your employees. For example, achievement awards. You can give educational assistance to employees up to $5,250. That's not taxable to the employee, but you get to deduct it. Like that is a awesome, awesome benefit. Also, employer provided cell phones. It's a whole list of things that you can give. Achievement awards, that amount can be up to $1,600 a year. So I'm just saying there's a lot of ways to create legal deductions and to decrease your tax bill without just making up stuff and, kind of going crazy with it. So I encourage you to take advantage of all these tax planning opportunities, lower that tax bill, keep more money for yourself and for your family and for your business, ultimately to create the legacy that you want and desire for the impact you want to have on future generations. With that, I say thank you. Our firm offers tax planning and preparation, accounting and legacy planning services. If you need any of these services, you can scan this QR code to schedule a call with me. I am happy to help you and get you to where you want to be, but also happy to help you reduce that tax bill, claim those credits, create that legacy plan. Holla.
Thanks so much, Gina, for that very relatable and delightful presentation. If you would, I know you're giving everyone a moment to scan if they choose to. And then if you would advance to the next slide. Remember, so I didn't see any questions in the Q&A section, but this is a great opportunity for you to ask any questions that you may have before we end for the day. I know there was a lot of information. I'm trusting that you are taking great notes, but if you are not in a position to type your question, you can raise your hand and I will give you access to be able to ask the question aloud. Are there any questions? Okay, well, yes, there we go. Oh, so our office is located, thank you for the question. So, is the question where our office is, as in the Illinois SBDC is at 5055 South Prairie? Or are you asking about the Jones Tax Group location? Maybe, okay. Gina, could you share where you're located, please?
Yeah, so our office is located in Flossmoor, and it is by appointment only because when it's cold and snowing, I don't spend time in Chicago. I'm just saying, I can't do it.
That's honest. Thank you for the questions and thanks for clarifying what you were looking for. If you're not already a client with us at the Illinois SBDC at Build Bronzeville, you can sign up in the same space where you registered for today's training. But if you know of others who could benefit from business support, such as planning for establishing their business plan or getting some insight on your marketing or financial analysis and referrals to professional providers such as Gina. We do all of that. You can connect with us via email, via our website, or give us a call. And then, as Gina mentioned, you can reach out to the Jones Tax Group via email, as well as visiting the website ginajones.com. You will receive a survey with the link to the recording, so you'll be able to review this as needed. I kindly ask that you complete the survey and you could even share recommendations for future training. That helps us to provide the very best training so that you can excel in your business. And that will complete the session for today. Thanks again for your time and attention. Many thanks to Gina for her wealth of knowledge,
Thank you,
and
guys. Thank you, everybody.
continue to have a great day and week, everyone. Take care. I think I stopped the recording.